Welcome to Cheques and Balances. I'm Michael Vincent. This is James Blair. And this week we're joined by Matthew Harris to chat all things GST and property.
So this one's going to be a really good one because we were talking to Matt about different topics for the podcast, and he goes, I get asked GST questions on property all the time. And Mike, you and I probably know very little about this subject. So Matt...
Don't tar me with that brush.
Okay, so we're going to change this up. We're going to ask Mike the question. So once again, Matthew Harris, Managing Director, Taxman, and Property Investor to the Stars.
Absolutely.
Joining us today, and we're going to answer some very common questions that Matt gets about GST.
Yeah, so good to be here as usual, and a lot of people won't know my background, but I actually, prior to being a huge success in the property world, I worked for Inland Revenue for 9 years, and GST was something that I dealt with regularly, and on this other side of the fence, it is still something that I deal with regularly. And to frame it correctly, GST is in the property market intrinsically. It's in new builds, it's in developers buying sections, it's in the costs of doing renovations and developments.
I can just see Auntie Cindy with like dollar signs and
Yeah.
cha-ching, cha-ching,
She's
cha-ching.
going, keep talking, Matt, keep talking. And but it's a confusing area. There's lots of different rules, despite the fact New Zealand has a relatively simple GST system. And it is also one thing that if you get it wrong in the property space, it costs you a lot of money. So let's kick into it.
Yeah, so I guess probably some of the questions you get asked a lot, and I also sort of get rinsed through me to you, first thing, do I need to be GST registered to purchase residential property?
So the answer is no in most cases, and that's a typical answer in tax.
Yeah.
But in general, if you are what we would commonly refer to as a buy and hold investor, so you're someone who's buying a property and intending to hold it for the long term, you are going to put some tenants in there and you are going to derive passive rental income. You are not required to be GST registered into that transaction. And that's there's a really simple reason for that. The government does not want to levy GST on residential rental properties because it would increase the cost of those properties to the tenants.
Yeah. Yeah, and I think that, again, so sort of for the average everyday mum and dad investor, usually they're going to be GST or GST exclusive. They will step back from it.
Correct. And so where it gets a little bit interesting, or where people commonly ask, is obviously when you buy a property from a private individual, GST is never going to be part of the transaction. So at the top of a sale and purchase agreement, there's one of the very first questions after you put the details is the vendor GST registered in relation to this transaction? So really important that gets circled, regardless of whether you are intending to use it for GST purposes or not. If that gets circled yes, quite commonly I'll get clients come and ask me about it.
Yep.
And that's the time it would get circled yes is if you're dealing with a property developer who would be GST registered.
So if the property developer is GST registered and I'm the purchaser, is there any impact to me? So do I have to pay GST? Do I have to do something, anything like that?
Yeah, so technically you do have to pay GST, but often, 99% of the time, the contract price will be inclusive of GST, if any. So you will pay the price that is the price. But really important thing to note is that when a developer sells you a property, they are paying 15% of the sale price to the government. So you are paying 15% of the purchase price to the government.
That's crazy. Like if you think about the amount of chat around affordable housing, and you go, hey, on $1 million property, you could swipe off 150 grand if the government didn't take their piece, and you could allow so many more first home buyers into the market. That's super interesting.
Yeah, I think it's a really valid point that we need to make on this podcast because of this affordability issue and all the changes the government has made favouring new builds. I know we're getting away from GST a little bit here, but favouring new builds over in situ properties. There's a huge amount of extra tax revenue it grabs for the government.
Yeah.
I feel a government rant coming.
Well, it doesn't have to be a rant, because if you think about the equation there, it is, hey, we're doing everything we can to, publicly, we're doing everything we can to push more housing stock onto the market. We're doing this, we're changing this rule, we're changing this rule. But fundamentally, what is stopping people from buying houses? The affordability piece. And how do we knock 15% off? Well, you just knock off the GST.
Yeah.
Exactly. And then we've got to remember that also included in that is council contributions.
Yep.
And when builders and or developers buy materials, obviously they're getting charged GST by the supplier of those as well. So there's actually quite a lot through the value chain where a GST reduction could actually make houses more affordable.
And in addition to the GST, there's the tax on the profit that the business is paying. They're paying tax, or the employees of the business are paying tax. It would be quite interesting on, say, a development of, I don't know, say 10 townhouses. Straight away they're making, $1.5 million on the gist of the sale, plus all of the other parts of the process and the total amount that's coming through. And we're not saying don't tax anything, because obviously you need taxes for schools and roads and hospitals and benefits and a whole bunch of different things. But maybe there's an opportunity to make things more affordable.
Yeah.
I'm going to pull us away from this because I can already see myself going, actually, James, you don't need tax for this, and I'm like, actually, I'm not going to, let's not go down that.
Yeah, there's a couple of things that I wanted to include in government spending just then as well, so let's keep moving.
So let's keep going down the development side of things, and let's look at perhaps a subdivision. So let's say I'm subdividing a property, putting another house on the back. How does GST play into that?
Yeah, so let's use two examples for this, because if you are someone who is buying a property, intending to subdivide it and sell it, you're actually what's referred to as a dealer, a developer, or trader in land. So you're someone who's buying a property intending to make money from it. In that case, you would be GST registered in relation to the transaction. In the ordinary course of business, you'd be trying to purchase from someone who's not GST registered. That way you can get what's referred to as a second-hand goods claim, which is basically a GST refund for the purchase. You then have all these costs that you'll claim on. You will sell the section at the other end and you'll pay 15% to the government. That's really simple. If you, and this is an unlikely scenario, if you buy from someone who's already GST registered, then the transaction is compulsory zero rated, which means you don't claim. It carries through the GST liability from the vendor to the purchaser, but then when you sell, you would still pay GST. So that's why that is a situation that we don't see very much. We only see it when people have made mistakes. Haven't checked sale and purchase agreements, haven't checked the vendor status, or the vendor hasn't circled it. They've gone all the way through to settlement, and they've gone to make their claim with Inland Revenue, and Inland Revenue is going, no.
Not today.
How often would you have a client contacting you going, and the result being, hey, I've stuffed something up with my GST?
Once a month.
Right.
Property transaction, it's always big numbers, because 15% of a property in New Zealand is always a large amount.
So what we're talking, like couple 100,000.
Yeah, well, it varies between about 80k to 150k depending. Yeah, it's hurtful, and there's a whole lot of provisions, and we're not going to get into them, but the GST Act has a whole lot of provisions about who that falls on. At the end of the day, even if it falls back to the vendor who hasn't done it correctly, you still have to maybe sue them, get your lawyers involved. The whole thing becomes quite messy. It's far better to get it tidy at the start of the transaction. So the other situation, say I'm just a residential landowner, I have 1,000 square metre section in Mount Albert, I've owned that for 11 years, and I have one house on the front and I want to subdivide the back and just sell the section. In that case, GST ordinarily wouldn't apply. That's because to be liable for GST, you have to have what's called a continuous or regular activity, which is basically a fancy way of saying you have to do something a bit to...
Business.
Yeah, business. But to be clear, separate from the definition of a business for income tax purposes, which is something that's carried on to make a profit.
Yeah. Okay, cool.
Okay. And how about, if we're going into summer, the domestic borders opening up, there's the hope at some point that people from overseas might be able to turn up. I'm sure there'll be lots of people thinking, hey, maybe I should turn my property into an Airbnb. How does, when it comes to Airbnb, GST work? Do you have to be registered, etc.?
Yep. So probably the second most common question I get behind should I be GST registered is I've got an Airbnb, how does GST apply? Now, it is a complex area. Residential property is exempt from GST, but accommodation and commercial dwelling is not. So a commercial dwelling is a hotel, motel, boarding house or similar. Airbnb drops into the nice little similar box. So if you have over $60,000 in Airbnb income, that's the GST registration threshold, then you are required to be GST registered.
Okay.
What that does is if you have an existing property, it drags it into the GST net, which means you have to do a whole lot of adjustments to get a refund, and then you carry a downstream liability. Lots of people don't want to do that, so there's some things that you can do to try and avoid it. So split up your Airbnb into different, say you've got two, each making 40K, you can split them into different entities.
Yep.
I've seen people put management companies in the middle. There is a GST mismatch. My personal opinion is that Inland Revenue doesn't have a high desire to drag these properties into the GST net unless they're actually full-time commercial loans.
Yeah.
Of note is that in the latest interest deductibility rules, a lot of people expected Airbnbs to be exempt from that interest deduction because they are a commercial operation. The government has specifically excluded them from interest deductibility because they don't want a whole lot of people turning their long-term residential rentals into Airbnbs just to get an interest deduction. And I think in our previous podcast we've talked about the impact of those rules on housing supply, and that's just another place where the government knows exactly what's going to happen if they disincentivize residential landlords, so they shut the door on it. Yeah.
Cool. And then so just to jump onto one that I get asked pretty regularly, lifestyle blocks, maybe there was some farming on a bit of the property, maybe they've split it and they're selling the house and then the land around it. What is the story with GST in that?
Yeah, so that's another little difficult area. In short, you can claim on the land portion of that lifestyle block.
Yep.
And the house and curtilage part is not subject to GST, but it does. But first of all, Inland Revenue don't like it. Plenty of people have bought a lifestyle block, said they're going to run 3 or 4 sheep and never do anything, and eventually they come back around. So first of all, now they scrutinise them a lot more heavily, and then they come back around and they go, right, have you done anything? But technically you can do that. Most of the time nowadays, those lifestyle blocks are already coming from someone who's claimed on them, so they would be zero rated.
Yeah. No, that makes sense. And we get a lot of customers sort of looking at purchasing these sorts of things. And yeah, it's something common that we get asked, sort of saying, do I have to register for GST? Am I going to pay GST? What is the story around this thing? And generally, again, it's vendor pays and it's all GST inclusive for my customers.
Yeah. So when I see a sale and purchase agreement, I always want to see the circle at the top and the yes or no, but more than that, I want to see inclusive of GST, if any.
Yeah.
Because that protects the purchaser.
Yeah.
That's the most they're going to pay regardless of the GST situation.
Yeah.
Yeah.
Before we wrap up, thinking about lifestyle blocks made me think of when the Lighthouse accounting team was trying to work out, I think they were doing a return for a farm or something like that.
Yep.
And they were trying to work out how at the end of the year there was more cows than there was at the start, despite no cows being purchased.
Yes.
And it took the team a little bit of time to work it out, but they got there in the end.
Yeah. So, I mean, we're never doing a podcast on the livestock taxation rules, but in short, like whoever designed those, first of all, needs a medal, because how do you account for something that's born?
Yeah.
And that's what the guys in the office had to figure out. These are all city slickers. And it was a pretty funny day because I knew the answer already.
Yeah.
Having already had that task many years ago.
To be fair, I think the worst question I ever asked when I was a business banker was a guy who he had a whole lot of beehives, and classic Auckland move. I was like, so where do you store all the honey? And he was like, what do you mean? I'm like, well, where do you store it until you're ready to sell it? And he was like, in the hives. I was like, oh, okay, that's cool.
Hey, the best thing with livestock is how many disappear.
Yeah.
You lost 20 cattle.
Yeah.
We all know where they went. In the freezer.
Yeah. Christmas. Yeah.
On that note, we'll wrap it up. Hope you enjoyed listening to a little bit of lifestyle chat and obviously those common GST questions you get asked around property. Please make sure to give us a subscribe on YouTube, a review on Apple, and we'll see you next week.
Cheers.